Hello and welcome back to The Investor's Opinion. Is Lululemon Athletica a good investment? Lululemon Athletica is actually an incredible company. I've learned about it only in the last couple of months, and it's impressed me every step of the way. Not only is the management team top class, their balance sheet amazing, but their ability to flexibly innovate into other pipelines in the fitness industry is second to none. Their approach to creating their fitness wear is almost akin to a tech company in the way they innovate and use science to produce high quality premium products. That might be a weird statement, but in some ways it's actually really true. Lulu focuses on the science of their fitness wear, making sure that you don't perspirate as much. The odors don't fill the air anymore from when you have those big sweaty ass workouts. It's fine. Lululemon have catered that with special textile materials and very innovative ways of producing their clothing. They produce their clothing straight in their own factories and deliver it to their stores. Their direct-to-consumer model is what makes their product so premium and so high in quality. They're also very damn stylish too. Moving straight into the business structure of Lululemon Athletica, their revenue and structure of their business comes in three particular branches: retail, direct-to-consumer, and any other sources of revenue that can come from the promotion of their business. The retail branch of Lululemon Athletica's business model is actually quite big. They have over 400 stores in North America alone and have started to expand into regions across the globe, primarily China as being one of their biggest regions of expansion, as the demand from it has been fantastic. Those brick and mortar stores make up around 70 to 80% of the revenue of Lululemon. However, obviously this may have changed in the last quarter due to the pandemic, but those were the general figures that we were looking at prior to this coronavirus. Next is their direct-to-consumer. This is their e-commerce, and what makes Lululemon Lululemon. It involves their marketing and their community environments and everything that you know about the name and the cult-like status that comes from Lululemon. Lastly, it's all the other revenue structures that come from Lululemon Athletica. This is everything from their outlet stores, self-promotional activity, their pop-up stores, and of course their supply and licensing agreement. Lululemon Athletica's model is very, very simple. They create a product, they sell it to you. They have ethical and green considerations in their company model, which also gives them a lot of rapport from not only investors, but their consumers. And a crazy number to throw out there at the very beginning of this video would have to be their 92% retention rate on their consumers. This is loyalty that can only really be compared to companies like Apple. To simplify Lululemon Athletica's business model, I would like to say that Lululemon is a premium company that sells premium clothing at a very, very premium price. But they do so while marketing a community-driven model to its consumers. Now that we've got the understanding of what Lululemon is and their business and revenue structure, we can move on to our analysis point of the video. So firstly, we start with a qualitative, and then we move on to a more quantitative and fundamental research, and then we look into the technicals finally to have a look at whether it's an immediate buy option or whether or not there are some technicals that could indicate some reversal trends or movements in the future. Here on this channel, our qualitative analysis always starts with our SWOT analysis. Then we move on to our economic moat, or Warren Buffett's competitive advantage. So we'll just jump straight into the strengths. Well, we can instantly say that the innovative products that come from Lululemon Athletica, these clothings with these specific lines that come with in specific functionalities, is just an incredible and very, very organized way to sell great products to consumers looking for them. The management team, well, it's amazing. If you even just listen to the CEO, he's got such great ideas. He's an incredibly motivated individual. The management team are very, very flexible and very modern. They know technology. They know what drives consumer communities. They know how to bring people together around their products, not for their products, but for what their products are designed to do. Fitness. A strong Asian demand is being a big milestone for a lot of companies, especially retail and tech. This is because the economy and the amount of population and growth of China has been extraordinarily amazing over the last 50 years. And this means that there's this huge untapped market that could potentially lead to millions and billions of dollars in more revenue. Lululemon Athletica's growth in China has been moving straight back to that obvious major strength of consumer loyalty. I don't have to say too much more about it. You know the cult-like status of this company. The way they treat their staff, the ethical and more green nature of the company, and the way that they try to operate is something I feel is heavily valued in today's world, and it should be attributed to owning a company that is ethically operating and green in its production. Should be valued higher, in my opinion. Lastly, we're just going to say straight off the bat, the financials are great. We'll get to the specific numbers in a minute, but it's definitely a strength. Jumping now into weaknesses, the stock is trading at a premium. A premium. It is priced to literal perfection. They also sell a luxury good. Like I said before, it's a premium product, but at a premium price. You pay the dollar, it gets you that dollar of value. But in a pandemic-like environment with an economic squeeze on most people's employment and income can usually cause luxury goods to have a bit of a drop-off, especially in the retail or consumer cyclic area. And this again moves right back into the fact that they are brick and mortar based. 70 to 80% of their revenue originally came from these brick and mortar stores. This gives me the impression that in the future, revenues may see a small decline or a consistently small decline if the e-commerce isn't adopted as heavily or as rapidly as it was in the first quarter. But we can move straight into the opportunities and blow off that weakness by straight away saying that e-commerce is growing fantastically, 70% in the last quarter, whereas obviously all the revenue that was coming from the decline clearly came from the lack of brick and mortar sales. But if e-commerce grows into this juggernaut, this ability to deliver high quality products from their stores may not only have higher margins, but also open themselves up to more and more consumers when everything goes back to normal, as people may continue to buy on e-commerce, whereas new patrons may just walk into brick and mortars. This may, in the long run, just grow an even deeper entrenched footprint for the product and the classic and most iconic name in athletic wear, Lululemon Athletica. So moving into our threats. Obviously, a major one would be just a cataclysmic failure of footprint growth. This would be as if China began to just reject the product that is Lululemon, and if they expanded into other regions of the world, such as Europe, the company would basically just fall flat on its face and no one would show up. I don't think this is a reality, and I think this is a very low percentage chance from a personal perspective, but it's something that we just have to acknowledge as a potential weakness. And if we see that, it may be time to withdraw our investment in the future. So that now does it for our SWOT analysis. And we can kind of understand now where the direction of the company is going, its strengths against its competitors, its competition, its weaker points, and also its opportunities for us as investors to capitalize on its value growth. So now we can look at exactly what makes this company unique to everyone else. What makes Lululemon Athletica stand out? Or its economic moat. Lululemon Athletica's unique competitive advantage comes from their very, very loyal consumer base. They sell a product at a very premium price, but they create an incredibly inviting and nurturing community around their product and the fitness that comes from their product. And it's such a powerful tool that it's developed a cult-like loyalty with the consumers and the product and the company. People love to associate themselves with Lululemon because of their incredibly robust community-driven marketing strategy. Now it's time for some numbers. We're going to jump straight into our quantitative analysis here. And because Lululemon Athletica is a mid-sized cap stock, matured in some ways, it's very easy now to have a look and see whether or not it is under or overvalued with respect to the information that we can be provided with. So firstly, as I did in my last video in regards to multiples, we're going to have a quick look at this very broad and shallow analysis. The industry average, using Nike as its primary example and its athletic wear, its size, and I guess you could say consumer loyalty, Nike has a PE ratio usually ranging around 60, and it appears that Lululemon's PE ratio generally sits around 50 to 60 as well. A lot of that as opposed to Nike being a dividend payer with a very substantially, with a great basis of its consumers, its loyalty, its marketing, its footprint, is being valued at a really high rate. Lululemon Athletica is, however, being valued at an incredibly high rate, and that's mainly due to its growth and the areas that it's innovating into to produce more revenue and earnings later down the line. So if we can basically assume that the growth and development of Lululemon is attributed the same value as Nike's current stability and dividend payments, we can already say that Lululemon Athletica, from a PE or shallow perspective, is definitely in an overvalued territory. Moving into that trailing forward P, we can see that we can estimate that it's going to be around 70 to 75. That again is really high and not looking too good. However, this is because of the way it's being calculated. A forward P, as discussed in my prior multiples video, is a trailing forward P, which means that it uses multiple different earnings points to then calculate an average-based estimate in the future in regards to where its PE will be with respect to its current price. If we remove these outliers or these estimations of bad or negative earnings due to the lockdown, expecting an economic recovery, at least in regards to Lululemon's sales, in the next quarter or at least until the next year, we can easily see that the forward PE comes out with a value of around 50. Now, that means Lululemon Athletica will grow into its extreme valuation right now within a year, and now makes perfect sense as to why there is a premium price on this particular stock. Lululemon's balance sheet is just great. We have 1.8 billion in assets with only 620 million in liabilities. This means the company has all the assets and monetary means to be able to pay off any short or long-term debt obligations that it may face in the future, while still having plenty of cash flow left over to expand, purchase new businesses, or enter into new verticals, as it seems to be planning on doing. Looking quickly at their income and cash flow statements, we see consistent growth year over year, except for the last Q1, which obviously gave us a negative year over year return of around 17%. Not too bad when we see that e-commerce was driving up to a 70% increase. This is essentially just consumers substituting their ability to purchase their clothing at the brick and mortar stores with the new e-commerce facilitation that's available. And as you can see from the stock price, the market hasn't really cared about the 17% year over year decline. And this is after some pretty big research obviously comes down to two main things that Lululemon have done in the past couple of months during this pandemic. The first would have to be their Mirror acquisition. This is an at-home personal training and routine-based schedule system that literally hangs or is in front of a wall that you work out in front of. Credit Suisse has also announced that they believe that the Mirror acquisition by Lululemon was an absolutely amazing one, that revenue from this will provide hundreds of millions down the road, and even within a short period of time. It's expected to break even as a company, Mirror, in the next year. And obviously the last point of why the stock price has been going up is because of e-commerce. Now we can do something quite interesting. We can do a discount cash flow analysis. Now I'm going to leave down to my fellow Kiwi YouTuber a link down in the description. Tom from Investing does a great DCF, very easy to understand modeling, and very great walkthrough video on his YouTube channel. I'll leave a link down in the description to do that. There are many different types of DCF modeling, but I really like Tom from Investing's decision and one he does it. It's a great one for you guys to learn, and it will get you guys into that more complicated computational analytics. So please check him out down there and say hi from the investor's opinion for me. Now let's do a discount cash flow analysis. And the ones that I do are generally a range of multiple different types. And I get a value of around $170 on the low end and $220 on the high end. And this is usually attributing about a 5 to 10% discount on that value. This means the company is clearly highly overvalued in respect to that discounted cash flow growth over the last few years. But it's poised to grow into this valuation with so much more growth verticals and expansion to come from this company, and so many opportunities in respect to just creative imagination into what they can sell as a company. It leaves a lot to be desired as an investor to leave your money in there for the long term. And I personally would be happy to purchase the stock at below $300 in giant droves and scoops. However, I don't actually think it will go down there, mostly because people already know that this is a very good company and has great financials and is likely going to eat into the market share of the failed athletic companies during this pandemic. Now, lastly, we can look at the technicals. These are going to be very basic because this is a long-term, very not volatile stock. So we're going to be able to predict some very, very common movements, at least in the short term, with regard to where the stock was going. So first, looking at the price movement, we can actually have a look right here. And as you can see, we can see that the price is on a long-term bullish trend. It is following a very, very linear pattern upwards in a very slow way. We can see that the RSI and MACD at this current time don't look too bad. They look like they're oscillating in a very healthy manner, in a very bullish manner. It would seem very hard to drive the stock into a more bearish pattern, but definitely could be seen in a more consolidating one in the future. With respect to buying times, if you are looking to build a basis on the stock, I would be looking for any movement towards that 200 MA on the 1 hour chart. That would be a great point to start loading up on some cheaper shares in the immediate market's valuation. I also wouldn't be shy on purchasing the stock consistently over a long period of time. They are a very stable company with great financials, great management, and great flexibility in the most trying times, and still manage to pull through a profit. So as far as long-term retirement-based investment strategies go, it's a damn good idea to own a company like Lululemon. Now that does it for me. It's been a great time. I'm enjoying making these videos. I'm sorry for this one being so late, and wow, we hit 500 subscribers. Where did that come from? So thank you guys so much for watching again. Drop that subscribe and like button. Let's hit that 1,000 subscriber mark. How awesome would that be? And let's just keep pumping out videos on company analysis, guys. Let's keep making some money, and good hunting. Stay safe.